streaming. Okay. All right, all right, all right. I think we're live now. Okay, so there we go. I believe we're live. Let's see. And I'm going to refresh the screen. It should be coming through. Okay, I've been live for a bit. Okay. Testing, testing, 1, 2, 3. And we are streaming. Okay, we are, oh, just that we're streaming. Yeah, we're streaming the gold chart. Hi guys, this is Dr. Greg McLeod from the Elite Traders University. I guess we weren't streaming before. We're streaming now on Zoom, I see. Don't know if we're streaming on Facebook yet. I'm refreshing the screen to see if we are coming through. Okay. And says it's loading data. Hope you guys are doing well. Again, this is Dr. Greg McLeod here. Testing, testing, 1, 2, 3. And we are sharing a screen, but I'm not seeing anything on Facebook. I'm gonna refresh it again. And discussion. There we are. There we are. Okay. There we go. We had some technical issues, guys. Yeah, so I was talking to the air. I was wondering where everyone was. Okay. How you guys doing? It's Dr. Greg McLeod from Elite Traders University. So good to be with you here. Hope you guys had a fantastic Easter. I did do all this earlier. You just didn't hear me because, I don't know. We had some technical issues, and I'm so glad that we're here today. And I actually was going to share with you how I put together $1.3 million, $1.3 million in less than a week, and I want to share that with you. But I want to do, first of all, do a little quick gold analysis for our people who are part of the Gold Rush program, and we are using our Gold Rush template, and we're able to find some really cool entries in the market. In fact, we had one of our students, his name is Adrian, and he went ahead and pulled out 2,200. I forgot how much he pulled out, but 5,297 pips, which was pretty cool, right? And he got long, nice pullback. Look at his entry. And I'm going to talk to you about the 3 keys to putting together $1 million. I really want to put $1 million together or $100,000 together, but it's the 3 keys I use all the time in order to generate large amounts of money. In fact, I'm going to show you like 1.3 mil, in just a few days. Now I have a bigger account, of course, right? But you can repeat this, and I had a few losses: 48 cents, 61 cents, 61 cents, 61 cents, 61 cents, 66 cents, 67 cents, 67 cents. So I had so those are my losses, and these are my gains: 45,000, 38,000, 38,000, 38,227. Who would like to know how to do that, right? Would you like to know how to do that? Well, gee, not me, Greg. I don't like money. Money's the root of all evil. Okay, no worries. I won't show you. No, but 1.3 mil. And so we'll show you how to do that. All right. But the key is finding the trend, finding the overall trend. And like, for instance, gold, our old high in December was surpassed. That was the high on December, our high that we had December 2023, right? And we broke that high, and we made new highs after that. Look at the new highs we've made. So there was more money getting long than getting short. In fact, with the Gold Rush Blueprint template, it has a nice little rocket ship, changes color, and look, nice entry, and you could have written this all up on the weekly chart. And from entry, you never saw much of a pullback, right? and we look at the daily chart, we can see there's a nice little rocket ship there, change of color. This is part of the Gold Rush Blueprint. Gold Rush Blueprint, you can find it at the goldrushblueprint.com, right? How about that? That's pretty easy, right? So if you want to check that out, if you've not joined the Gold Rush Blueprint, Sean says he can hear me and see me. All right, my brother, how you doing? Sean, I tell you, Sean was very helpful back in the day. He is a pip and run hero. He found an indicator, and that indicator, we still use that indicator that he found. Sean Evans, he is a pip and run hero. So always glad to see him in the room. And he's also we've got some Gold Rush Blueprint stuff going on here. And oh yeah, that's what I was gonna do. Let's see. I went to get a haircut, and so I gotta look all busied up for you guys, right? And yeah, let's see, still running. Yeah, it didn't end. That's right. Yeah, remember we have our King Sumo contest for the winners of the Pip and Run, the mentorship, and some other fabulous prizes. And we've got like 1,732 entries, 32 contestants, and we're going to give away. I guess it's still running. Thought I was going to, yeah, because I was going to announce the end of it, and I was going to. Oh, ends on the it ends on the 6th. Okay. So we're going to be cool. We're going to have some winners, and it's going to be great. And I was going to announce it today, but got the date mixed up. So it's 4/6. So the contest is still running. So if you want to still get entries in, you can still do it to win mentorship with me, along with some fabulous prizes, right? One of the prizes will not be my Trader One Raider license plate that I got for my car. That won't be one of the prizes. But we will hook you up with some merch and also some really great courses that'll help you in your trading. So I look forward to you joining King Sumo, and it's still not too late to enter. We got 2 days left to get some more entries in, right? And okay. So anyway, going back here. So this is a very strong trend. Let me show you another strong trend. Who likes chocolate? Who likes chocolate? Chocolate. I love chocolate, right? Let me go to my commodities. Chocolate's been on a tear. One of the reasons there's been a drought, and that drought's been so bad that it's caused chocolate prices to go up. However, when they start talking in the news about chocolate prices going up, what does that usually mean? It usually means a reversal, right? But let's see. I haven't looked at it in a while because did I get short? I don't know. Here's cocoa. We got sugar, orange juice, coffee, cocoa, right? And I'm going to take off our template there. We're just going to go value zone template. No, we don't want to do that either. I just going to clean. There we go. So here is so we fell from that high. And I kind of figure that usually when it's in the news and they're telling you, oh, prices for Easter bunnies are going to be higher this year, that's like the best time to go short the market, because they're always going to be behind. They didn't tell you that prices were going up here. They tell you up here, right? So Easter was over here. We had a little spike up, tweezer top, and then prices dropped precipitously, right? So let's look at, but look how long this thing has been on a tear for a long time. Prices didn't just start going up. I mean, we basically were basing it 2023, and like gold, cocoa started moving up too. A lot of the sugar started shooting up too, and look at that. That's parabolic, right? And the thing about commodities is when they go parabolic at one end, right? They'll go parabolic to the downside, and then they go to a super high, and then they'll drop, right? So my thinking, I was trying to find something in the forex market that cocoa, but hard to find brokers that have all the instruments, and probably have to transition to the futures to trade some of these things, right? But this was a tremendous run. I mean, all you could do is just buy a runaway market, right? and we've probably got a long way to go on the downside, right? If you just take the base low and you take your fib from maybe the base low to the high, right? And you look at 38 to 23% retracement to $8,280 a ton, right? And we're at 10,000. It's like a $2,000 move, right? So anytime you get like a little retrace, I know this is not the Coco show. Hey, that sounds pretty cool. Coco FX. That sounds like a great idea, right? That's how you like your markets, chocolatey. Or and quick, like Nestle's quick, right? So here we go. Oh, nice little retracement against the trend. Here we go. Yum, yum. And we got all that possible space to the south side, 2 hour chart, nice little flag pattern. Don't get me started on this. Get some Nestle's cocoa, hot cocoa. Boom. And is that your target too? Come on now. Why? Because we're on the other side of trend. Once we get on the other side of trend, it's like it's a downhill battle. You're gonna have an inverted head and shoulders or a bearish head and shoulders pattern, shoulder head, forming a shoulder. When this forms that shoulder, we're go cuckoo for cocoa. For those of you old sugar cereal commercial watchers. So that's I'm looking for cocoa. This is not the cocoa show, but this is actually we're looking more at gold, which is a commodity. But all the commodities, you look at sugar. Sugar had shot up. Sugar dropped too. But we go back to like weekly sugar. I mean, this thing. So what happens? They go to extremes. They go through very tall extremes, and then they reverse, and they go all the way back down. So they basically stay in a range for decades. I mean, it went a little bit higher than the range, but we'll probably see. Because what happens is farmers start making, oh wow, I can make all this money growing sugar. So they start growing a bunch of sugar, but then nobody wants sugar anymore. Then they got all this sugar. What they're going to do? They got to offload it. It's going to go bad. It's gonna get hard. It's gonna get stale. Then they gotta pay for storage. They gotta pay for rental of silos and stuff like that. So what they gotta do? They gotta mark it down. They gotta make it cheaper. So once you get high prices, the farmers are still making. Hey, how come I can't get $27? I'm sorry, we got too much sugar, but I got this big harvest. Oh well, you're gonna have to mark it down. So now it starts falling and falling and falling and falling and falling until it's back to $9 again, right? There's $9. People are saying, "Oh, I can't make any money selling sugar. This sucks. I'm going out of business. Yeah, I'm going to start growing potatoes. Yeah, I'm going to grow onions or cabbage or something. I'm going to grow like cannabis. Forget all you guys. What am I going to grow like sugar, right? And then all the sugar farms are gone, or they're growing something else. And guess what? People want sugar, and there's no more sugar because no one's growing any. And what happens? The price goes back up again. And then you go, oh my goodness, it's $16 I better get rid of these potatoes and start growing sugar, right? And then it goes higher and higher and higher. And then everyone's back buying and growing sugar again. I'm going to grow sugar. I'm going to grow sugar. I'm going to grow sugar. Yeah, we're going to get rich. Oh. So this cycle happens over and over again with the futures market, right? And so when you get down here, it's, that's, we go from one extreme back to the other extreme. So now that's these are called the softs: cocoa, coffee, sugar, frozen concentrated orange juice. Look at this baby. Oh, this is like trading places. This is what they were trading: frozen concentrated orange juice. Look, drop, rise to a new high, pull back, retrace against the trend, and then see you later, right? So this is setting up for a nice little sell too, as long as we can stay below the old high, right? The bulls want to make new highs. They hit up with their horns. Bulls hit up. That's what they call bulls, right? Bears hit with their paws. They hit down. Bearish, bullish, right? And I make my green candles bullish and my red candles for bearish because that's where everything is, right? So bulls bearish. I know some people use different colors. That's fine, but I know red means stop, green means go. It's embedded in my brain, so they brainwashed me. I'm good, right? Lumber was another. See, look at that. Lumber was super high. Look at that. See, lumber super high, right? Couldn't find, you wanted to get some, to build a house or something. It was super high because it was, you had the what they call the supply chain disruption, right? So that made all the raw materials super high. And then everyone's like, hey, I'm gonna cut down some wood. I'm gonna cut down some wood. Hey, let's get some more wood in there. We're gonna get rich and sell wood like at $1,440 per board foot. And then everyone starts selling it, and it's like, I don't need. We have too much wood. Would you stop? Would you stop growing so much wood? Stop chopping so many trees down. What am I gonna do with all this wood? I ain't buying it for this price. How about I discount to 1,100? How about 1,200? How about 10,000? How about 960? Now it's in reverse, right? And then guy goes, I lost my shirt on wood, on lumber. I'm getting out of the business. Me too, me too, me too, me too. Everyone's gone. Hey, we need wood. There's no one selling wood anymore. Would you cut some more wood down, please? And then, okay, how about 480? I'm going back to chopping wood for that. How about 500, 567? No. How about 700? How about 800? Hey, we can get rich. Let's chop down wood. And it starts the whole cycle over again, right? Think of the spinners. Remember the spinner, with the fidget spinner? Everybody, oh my God, I'm gonna get rich. I'm gonna buy all these from like Alibaba and sell them online. And then everyone had fidget spinner. Well, nobody wants it anymore because there's too many of them. You go to the liquor store, you have they're on the counter next to the packs of gum. They're giving away in cereal boxes. Like they're not trending anymore, and nobody wants them. Or Gops or the Pogs. Remember the Pogs in the 90s? I'm dating myself now, but it's all about supply and demand, right? And that's really what I wanted to just talk to you about: supply and demand, and basically the three keys to putting together a lot of money, putting together 1.3 million, right? Like I did during this training session. I just stuck with well, first of all, I determined the trend. The first key I want to tell you with is finding the trend and finding the trend on the Kiwi dollar. I'm going to just show you my chart. Okay. So this is the Kiwi dollar, the daily chart, and this is a special setup that we have for certain level students. But it's not publicly available. But you don't really need this if you just understand that, first of all, where is the trend? Well, the trend is, we're kind of heading down, right? We go farther back, and you can see if you're on your phone, you are not going to see this. You're going to see, but Greg, it's an uptrend. Why are you selling? Because you're on your phone, and the phone is a very small. I don't have mine because it makes too much noise. There it is. I do. The phone is a very small screen, right? It has a very tiny screen. And so you don't get the full perspective, the big view. You have this much view, and all this is out here, right? So if you're just looking here, you are seeing only a small portion of the market, and you think you're in an uptrend. And you're like, oh yeah, man, oh, this is going up. But you're on a phone and you don't see, do you see what I see? No. You don't see it because you don't have the right perspective. Okay, I'm going too far back. I'm like, I was like back in the 2020s. Like, look at that. That was a COVID drop right there. I'm like, no, I'm going too far back. There it is. This is just a little, right? So if you're looking at this, and let's say you're looking at your phone, right? And you're looking at this, and you have it stretched some kind of odd way where this fills up your whole screen, right? Right. And you're looking at this and you're seeing this is wow, this is like a massive uptrend. This is like huge, right? And that's all you're looking at. And you're seeing green candles and all this stuff on your screen, but your perspective, you have what we call time relevancy error. Time relevancy error is that you don't recognize that there is, on a higher time frame, there is more candles pointing you that this is just a retracement in an overall downtrend, right? And so because I had that information, I was able to stay on this trade. I had some Bollinger Bands that were like showing us this thing we were topping. I had some other indicators saying that we were topping as well. It's WADA Altera explosion thing. Was able to get my hands on. But you can see that if you zoom out, just go back a month. So how far should I go back? Go back a month. If you go back, this thing is a downtrend. Look, the Bollinger Bands are pointing down. These are pointing down, right? And it rallies into resistance. Resistance, right? And it's forming weaker candles, smaller candles, trend line break. This is a demand line. Every time price comes down near this area, prices go up. Prices go up. So finally, we have supply that is greater than demand, right? And once I saw that, I started hitting multiple trades. We have basically a flag, a bear flag, and I just held it to this old level of support, right? This is this is gold, right? So the first thing I want to know is what the trend is. My first key, what is the trend? Is it up? Is it down? The major trend that's going to impact my trade, right? And so there's ways of it. I don't have enough time to go into how we do that, but that's the first key. You need to find what the dominant trend is, and then you need to look to your lower time frames and look for entries in the direction of that trend, and you need to stick with it, right? The higher time frame is what you trust and guide in, and I believe in trading in 2 time frames. I don't believe in trading like a pirate. When you trade like a pirate, you're only looking at one screen. The little tiny window right there, and that little window is not only is it only on 1 time frame, but you miss the whole time frame that's higher. And I like looking at usually 5 times the size of my trigger chart. So maybe if I look for an hour, because this is a daily, maybe I would go to a 4 hour, right? Well, the hour was good, right? Because at the 1 hour, these arrows here show my entry, and yeah, it's skid a little higher. So I had a bigger stop, but I had a bigger target, right? So my stop was at this old high, because there was Fibonacci resistance there too. If you take a fib from that high, I need to screech this a little bit. You take a fib from there. See, this thing landed right at the 50% retracement, right? And I actually shorted at the 38. My entry was a 38, and I was looking at maybe 2 Fibonacci's. I said, now I'm going to be a little bit, closer to 618 as far as my stop placement, right? So I'm looking at a major risk reward here, where this is the amount of risk that I'm looking at in the market. Hello, make that red, and actually it'll be a little bit higher than that. It would have been like at 62.45, and this is 62.20. So 62.45 is up here. Right. So 62.45. And so to my entry. So my entry I had entries in here. So it looks like a pretty hefty stop, right? But I'm going in the direction of the trend, right? So this is my my risk reward, right? And I'll just do that same thing with that, make it a little bit more translucent, right? And slide it over a little bit. So it was a fair risk reward. I had what, like I said, what really helped this trade out was I had Bollinger Band resistance. I had 50% retracement. But first key, I can determine what my direction is, right? I'm not buying. I'm not a buyer. I'm not looking at a double bottom. I'm not a buyer. So first of all, is trend direction. The second thing you want to look at is you want to see your value. What is the value? You're either selling premium or you're buying value. If you're shorting, you want to sell it at a high price. You want to sell strength in a downtrend, right? You want to sell rallies in a downtrend, which is counterintuitive because you think, oh, I want to sell the breakout down. And how many of you ever sold a breakout to the downside and it zoomed right back up at you, right? So we want to sell rallies against resistance, right? So we want to, and that creates value. And when you are able to sell it, because someone's like going, oh my God, this thing is going up. Those are the people that are going to fall for that trap, right? You want to be selling strength to someone, to some idiot, someone who doesn't know, right? Trying to be nice, right? Because you're selling something of value. When they buy it, they're like, oh yeah, this is great, right? Because you sold premium. You want to sell things that are expensive. You want to sell it, and then you want to buy it back on the cheap, right? You want to buy it back when it stops moving down, and here prices start flattening out. So I start pulling money out. Now, if you can find value, like if this is a downtrend that's going up, I'm trying to create lots of. I want to sell as much premium as I can. I want to be as expensive. Now, if I wait a little bit longer, I could have got right to 50% and really sold it at premium and maybe made some more on those trades. But I tell you what, each one of these is a day, and we went from 61.80 down to 60.80, so roughly 100 pips, right? And I just hammered multiple trades at this over and over again as cost improvements. As this started to go up a little bit, I hammered some more, and I hammered some more, and I hammered some more, I hammered some more, right? And then I just forgot about it. I let it go, and then I came back to them. I go, look at all these guys. I actually have a video of this after me closing now, and these are my losses for that month, right? So it's pretty incredible. But and people were about, well, what about your risk reward and your stops and limit? If you find now here I bent my rule a little bit because I really thought, hey, at the 38, I pulled the trigger on the 38, and ideally taking some at the 38, taking some at the 50, and maybe have one more shot at the 61. If it keeps going up, I'm going to fire another short at it. But I kind of said, you know what? I'm overextended right here. I'm not going to shoot out anymore. And really, the color change on the trend line break was like the perfect entry. And I could have got a little bit more value. So I can critique my trades. You say, oh, wow, these are great trades. I'm like saying, man, it kind of sucked, really. I got a little early, candle was still green, trend line hadn't really broken yet. And on the 1 hour, I got basically a trend line. I might have taken this as a trend line break. Now that I think about it, I think I went short, break, and then it shot up. But then it formed a head and shoulders, and this thing just came screaming, didn't come to the other Fibonacci at all. And then turned back. And no, this took, how long is it? Like, well, how long does this take, Greg? Well, 21 down to actually March 4th, right? So actually took a little long, right? Almost like what 20, 26 days, 27 days. So about 3 weeks. So it took about 3 weeks to do that. But the thing about it, I was not stressed about it, and yeah, I kind of checked on it. Here, I was like a little stressed, like, where's this thing going, right? And then it started when it got this candle, this break of structure. I kind of like knew I was kind of home free, and I was tempted to go hit it some more because at this point, you know, I would still be underwater still. But until we broke this low, broke my entry, that was probably the area to really like, ground and pound, just like hit it some more, and then we just took it down and really missed the absolute low. That one we got the absolute low there, and I might have been scrambling to get the video going to so we closing them out, and it rose a little bit on me. Um, but yeah, if you sell with value, then you will, your risk reward is going to take care of itself, because either you're going to buy when there's lots of support, like here would have been a nice buy right here, and guess what? We would be buying at a low price, right? We're buying low, selling high, right? We could turn around and repeat it and got back in this trade. We had a clear double bottom, a clear actually dropped to another Fibonacci area. I mean, it was kind of like a really extreme Fibonacci, like the 78% retracement. But it hit it a couple of times, and it hit it twice, once, twice, three times a lady. And then we had a nice shot up. Could have easily reversed that trade, but it's like what I say: bulls get fed, bears get fed, and pigs get slaughtered, right? And the whole idea is don't be a pig, right? So the whole idea is, you're trying to, you're looking at what the crowd is actually. Now here, now it's kind of 50-50, but at the time of the trade, I don't think I have a screenshot of the actual chart. But what's going on is that you probably have a lot of people who were leaning onto the long side. You go to my market heat map, we have something called the sentiment. No, we used to call it the stupid money indicator. But this is how people are positioned in the market, and it's a really cool tool. Go to mymarketheatmap.com, and it's just $19.99 a month with other tools like the heat map and stuff like that. But what we want to do is look. There's lots of tools: charts, quotes, economic calendar, Forex TV, and then you look down there. There's liquidity. Tells you like if liquidity is down, it's like not even worth trading that night. But go down to look at central bank interest rates. Look at sentiment. Not sentiments, sentiment. Okay, I know what you're thinking, right? And then what we're gonna do is let's look at the Kiwi. Look at the Kiwi dollar. And then there it is. We have 74% of traders are long, and 25% of traders, 25.6% of traders are short. Now, the way sentiment works, and I talked about in my other videos, sentiment is the opposite. See, losers pay winners in the market. It's a zero-sum game. So if everybody is on one side of the trade, they can't pay all those people. So these people, the pyramid, you ever see a pyramid? Is always lots of bricks at the bottom and fewer bricks at the very top. Well, this is how the market is a pyramid. Okay, let me just, it's not an MLM pyramid. Okay, it's a pyramid where you have to have so many losers on one side of the trade and so many people. The smart money is usually, they're fewer in number. Okay, let's look at our government now. No, so 74.4% are actually long, and only 25% are short. So this is bearish. Okay, it's bearish. It's counterintuitive. It's not democracy. It's not a BU contest. The person with the most votes doesn't win. I really can't use that example anymore because people are talking about the election and stuff like that. But anyway, you know what I mean. If everyone votes on one side of the trade, it usually means it's the opposite, right? So this is actually bearish for the Kiwi dollar. And we can look at other things too. Usually this is like what 3-to-1 ratio. You look for a 3-to-1 ratio, and you look for other things. Let's look at the euro. In fact, with non-farm payroll coming up, I just wonder what the euro will look like. We got the pound dollar. Pound dollar is like almost 50-50, 44.68% are long, 55.32% are short. So you've got this kind of, there's no real advantage in sentiment when it's 50-50. You want to see like extremes, like in the 70s, the high 70s or 80s. I don't think I've ever seen 80, but so let's take the euro. I think I did. I pass it by to G, B, E, 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 Eric. No, are these, are these ordered in alphabetical order? No, those by volume, by instrument. There we go. Or sorted by instruments. That way we can go down alphabetical order. And then we look at EUR/USD. And we're coming up there. It's like, oh, it's kind of like 45.97 are long, 54.03 people are short. So there's not a real advantage here, even going into non-farm payroll. The majors seem to be equally balanced versus the US dollar. The crypto's interesting. Ether, 71.69% of people are long, 28% are short. So this may be bearish for Ether. Bitcoin. Let's take a look at Bitcoin. You guys interested in that? Type something in the box. Let me know if it's something you want me to look on the sentiment index about. It's actually kind of fun, actually. Well, it's all fun. If you like markets, I love markets. And, I'm a market junkie. So 74.46% of people are long and 25.54 are short. Losers pay winners. So we could see a pretty precipitous drop in BTC USD. Maybe we can actually we can take a look at a chart. We can pull up here, right? I'll pull it up on yeah, BTC USD. Let me know if this is helpful or useful. Let me know in the chat. Let me know if you want, if you like what here. This is Wata Atar explosion, and so we can see that we had a nice pullback rally up to the midpoint of the Bollinger Band and a drop to the 6,600 area. Small body candle, and so what do we got? We have a sideways consolidation. We got like there's no real edge here. But the sentiment is telling us this thing is going to could go lower, right? So we've got this, we break the lows here. We got a wick low of 60,828, and so we might come back to the midpoint here, or maybe even retouch, maybe form a double top or so. Again, non-farm payroll coming up, but after that we should be able to see some movement. We break this lower trend line here too, demand line coming out of that, right? Which would look like this zoomed up on the 1 hour, right? And we could see lots of congestion there, and we also have another line we could draw for a trigger. We have some type of a trigger, and it might come out of that, right? That wick there, somewhere in there. So that with 60, again, we got a trigger low, and you can set an alarm. Go to your trading view or something. You can right click the chart, and you can actually set an alert. And like trading view charts will actually send you an email or send you a text message. And it'd be cool to have a text message that'll make you money instead of one that's trying to charge you money. That'd be kind of cool, right? So there we go. So put a message. Sell BTC, maybe. Okay. Because sometimes what happens, you'll see an alert and you go, it's got an alert now. What's that for? I don't know. And then, oh my goodness, I got $1 million off that thing, You just ignored it. It must be a telemarketer. It turns out to be like this whole winning trade that, hey, Johnny's in the well. Timmy's in the well? Is he well? Does he say, where is the dog? Timmy, okay, what are you talking about? Timmy's not feeling well? Timmy's in the well. No. Right. So your phone will try to tell you something. Yourself from the future will say, I know that we're on a shelf. I want to sell this. Um, but you got to remember why, make sure you put like a little good description. And that way, when you do, because it might take a few hours, it might take a few days, and you get busy, and then you get preoccupied with other things, with your job, with your wife, with your spouse, and then all of a sudden you see this alert and you don't know what it's for, and so it's very important to keep your trades well documented, and do your planning. Do your planning on your Sunday, Monday, or the liquidity is kind of low anyway. Take that time out to chart and to plan what your resistance levels are. Go out to your daily charts and draw your support and resistance, and then drop down to your lower time frames, right? And if you need help about charting or something like that, put in the chat box charting, and DM me, and then maybe we can get on a quick call or something like that, and we could see how you're charting, how you're looking at the markets. Okay. So with that said, again, you want always key number one, trade in the right direction. And the key number two, you want to have value. You want to look for value, and you want to find that value on a lower time frame chart that's 5 times different than your higher time frame chart. You want to start with your higher time frame chart, mark out your supports and resistances. Those are your 3 keys. And I want to thank you so much for being with me. And I want to encourage you. We are running our spring prop challenge with our top trader Cut the Rope and me. I'll be there too. I'll be backing up the spring fling, right? It's $107 for the event, 4 days, 11 hours, 57 minutes, and 3 seconds left. And it's going to be a hoot. They're a 3-day event, Tuesday, Wednesday, and Thursday, April 9th through 11th. 8 a.m. New York is going to be Cut the Rope. 9 p.m. Asia is going to be me, yours truly, and I'm going to be trading during the Asia session. Cut the Rope is, and then we're going to be using, we're going to try to pass a prop challenge in 3 days, okay? So no more sitting there nursing your trades and waiting. Oh my goodness, I'm almost going to breach my account, blah, 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 right? No, it was like I actually was following Cut, and I was on my tablet, laying in my bed, and I passed stage 1 of Blue Guardian just by watching him trade. I'm like going, you know what? If everyone was, if we would give, show some, like, people could look over our shoulder and see the trades that we make, right? And follow them, they could learn how to pass a prop challenge. Okay. So so you might get access to $10,000, $25,000, $50,000, $100,000, $200,000 of capital, like one of my students, Cobus. Yeah, Cobus was able to get $200,000 in prop funds. I know you guys are having trouble with the prop accounts if you're US. Blue Guardian seems like the only one. I know I had recommended the 5%ers, because the 5%ers, kind of, I don't know what their problem is. They had pictures on their website of people from the US with funded accounts. And so that's why I said, hey, that's a United States flag last time I checked, red, white, and blue. I mean, Austin Z, that's an American flag, right? And then Casey, look at her. She got 125,000 in management. She has an American flag. So I assume, hey, got this. So I think, Greg, did you do your homework? I saw an American flag. I saw, I'm looking at this. I said, well, these guys must take Americans. And they get an American flag here. I see 3 American flags. But then we get this a bit of news coming out that they don't take US. And that was pretty I think Daniel shared it with me. Thank you, Daniel, for sharing that email with me. And it was pretty sad. So unfortunately, US clients cannot register at the moment. At the moment, that gives you some hope, but we don't really want to rely on hope. We got to find someone that allows us to trade. So if you need further assistance, please do not hesitate to reach out. And this is Michael B of the 5%ers. Okay. So that's so thanks, Daniel, for researching that. But again, I'm looking at American flags and I don't know what's going on, right? But anyway, I almost want to encourage you to come over to Blue Guardian. Blue Guardian. Blue Guardian. It's BLU, right? Blue Guardian. Blue Guardian takes US people, and and you can get the link there at our challenge. Our challenge, it's on the challenge page too. You come, I'll go ahead and give you that. Pop that in there, people. Come on, people now. Smile at your brothers, everybody. Bum, bum, bum. Oh, Sal. Hey, man, what's going on, brother? Contact Greg. Quick question: do you look for trades every day, or do sometimes you go a day or two without? Yeah, sometimes I don't. I don't take any trades. Right? Non-farm payroll. I'm not gonna take. I mean, I did take some euro. I told you to get back in the euro on that long on that pullback. So I did get back in. Right. So this is the Elite Traders Live, and if you want if there's a button right here, there's a back to bases. I had back-to-back losing trades. That's kind of a funny video too. I had someone actually, oh, Greg, you're a faker, man. You lost trades, man. I go, yeah, I lost 2 trades, right? And I had like 100. I had like 100 winners. It was hilarious. People don't watch videos; they just see the headlines. They get hooked, right? So here is if you want to go ahead and the Blue Guardian link is right there. You can go ahead and click that in there as well. Okay. So yeah, I don't, like I know if non-farm payrolls coming up, I'm going to wait a little bit. Like I know my winner circle people are going, where's Greg? Where's Greg? I'm like, liquidity. I'm looking at the liquidity and like things are flat. Why? Because everyone's waiting for non-farm payroll. So why am I want to put my capital in the best possible position to win, right? So why am I putting out, your capital is like your soldiers and you're a general. And, you see these like movies like where they're totally outnumbered and there's mines and all kinds of really bad stuff. And the commanding officers, go fight, go forward. And everyone's like looking, I don't think so, right? That's an order. It's like, you're ordering your troops to their death. When you send your money out, our whole goal is to send our money out and bring back more money, right? It's like that video game Choplifter. Remember Choplifter? Choplifter, the helicopter flies over and it flies over the border and it rescues the hostages, lifts them up, flies back, and there's a little American flag, and they land and they let the guys out. The little guy waves back at you, Choplifter. Well, that's what we do. We dispatch our money, right? On margin, we send our troops in to bring back more, right? And now we have more troops, more money to go back in the market and pull out. But you don't want to send them into a firefight, right? You want to send them into it when we have the element of surprise. We want to send our troops in, send our money in when it's quiet, where we have an edge and an advantage. We don't send them into like a volatile market with wicks going up and down in a fast-moving market. You're just like trying to go up against the hill, and the guy has like a machine gun. He's shooting at you. Charge that hill. I don't think so, right? So we got to be strategic how we deploy our money. Because if all of our money gets shot up and captured, and that's what the banks do. The banks are the enemy. You send your money and they capture your money, and then your money doesn't come back. And now you have zero, right? And then what are you going to do? Put your credit card in, buy some Bitcoin or whatever, and then send some more in there, right? And they don't come back either. And can you imagine a bunch of little like George Washingtons and Alexander Hamiltons are all looking at you like going, you're going to send us out in that? Do you have a strategy, sir? I saw a bullish engulfing candle and I think it's going up. So you guys go in there and bring back some, like going, oh, here we go again, right? So you got to have a strategy. You have to have a plan. And you have to like trade when it's most advantageous. Not just because the Forex market's 24 hours a day, 7 days a week, 6.5 days a week, does not mean that there's a trade every single day, right? Because and that's why I thought I would Sunday morning or Sunday evening, I'm getting, oh my goodness, the market's getting ready to go open, and it's like the spreads widen out, like 20 pips, and then they get these long wick candles, and then they gap, and you blow up your money, and the week hasn't even started yet. Now you feel terrible, right? So you want to look at the Forex liquidity. There's an indicator on my market heat map. You can look down there. You can see what's going on. It's like here. Well, of course, it's dead. It's aged, right? And it's going to start picking up, right? So we can look at the liquidity, right? We can look at the liquidity. We can look at the heat map itself and look at all the Forex pairs and see what's. If it's all gray, I mean, that's not going to be helpful, right? We want to see things that are strongly trending green or strongly trending red. And, strongly trending is, or for the market to have life, this thing has to go to 0.20% plus or minus, right? And that's when it'll change color, because guess what? If it moves 0.2, that's a pretty good move, right? Just as a starting point. Usually by the mid part of the market, it's going to be like 0.6, 0.5, and you have a very, very strong market that you can get in and out of the market in. And usually it's going to match up with what's going on in the economic calendar, right? We should see, I think we have some Australian news today. We go to the economic calendar and see what's going on for Thursday, right? And okay, somebody's got to kickstart this thing. Okay, we have 17 minutes. We have Australian balance of trade in 17 minutes, right? And so that's going to be the active currency. Australian dollar, New Zealand dollar will be in play. And what tomorrow, non-farm payroll, previous number was 275,000. We look for a drop to 200,000 jobs. Employment rate supposed to remain at 3.9%, with hourly earnings month on month supposed to rise from 0.1 to 0.3. Then we're going to have a lot of Canadian employment data too. Unemployment change from 40,000 jobs dropping to 25,000. And this is going to be based on some of the advanced forecasting AI stuff. The job market's supposed to get really, really bad. I've never used this AI stuff before, so it'd be interesting to see if we come out with the number that's forecasted. And I'll even share with you that. In fact, before we go, I want to share that number with you. That way we can see if, hey, Greg, are you scaring us? Are you full of crap? Does this really work? And so I'm actually going to share this with you. Okay. Gotta find it. And yeah, here we go. Non-farm payroll forecast, right? And so we're looking at so this is what I mean, it looks pretty whack what's going to happen, right? So we are I mean, there's a margin of error, of course, right? So we're looking at, this is where we're looking at the March number. March number is supposed to be, they're forecasting negative 94,000 jobs. But, the average error is plus or minus 48,000. So it could be 48,000 over or 48,000 under. But they're looking for a negative number for March, right? And so it'd be very interesting to see. They're saying 200, the normal stuff is saying 200,000 on the heat map, right? They say the jobless claim, literally a drop from 275 to 200. So for this to be negative 94,000 would be such an incredible number. I mean, we would see definitely interest rates would be cut, right? That would be super, super bad news, right? And again, it's an error of negative 48,000. So even if the error was say 50, well, then that still makes it negative 40,000 jobs, right? So they're looking at this number to be negative when all the consensus tells us 200,000, right? We can check another place to see if it's anywhere in the ballpark, but they're looking at even out to September, we're going back to COVID levels again, this is scary stuff if you're an economist. And like saying, where do you find this stuff from? I don't know, but the test is tomorrow. So 94 is what the AI is saying. People are saying 200. So even if we split the difference, it's kind of, it's kind of like showing that the economy is showing some cracks, right? Oh, we can go one more place. We can go to Forex Factory. That's another place that has an economic calendar as well. And we can see what they actually say on their number. Well, we'll see 155 is ADP, which measures employment. They use they print the paychecks. When I worked for the brokerage, ADP printed my paycheck. So it's easy to count how many people have jobs, how many paychecks they print, right? But there are other companies too, right? And so they're saying 155, forecast call for 148. They came out with 184, which was higher than expected. So sometimes these numbers get really whacked. Fed Powell speaking. Let's go ahead and then. So they're forecasting claims 221, higher than expected, but non-farm payroll 212. 275, the high number. Forecast call for 212. So they're calling for about the 200,000 area. So 94,000 is like totally like way out there, right? So let's hope it's not that bad, right? But if it is, well, then that would be a very big push for the euro, the pound, and other things too to the upside, and the dollar would probably crash if we had extreme numbers that were out of the ordinary. So anyway, so it's going to be very interesting for non-farm payroll, and let me know what you think it's going to be. Pop in below. What do you think your non-farm payroll numbers are going to be? Anyway, I went a little bit longer. I know we were a little bit late getting started, but I want to thank you so much for being part of the live Forex day trading den, and look forward to seeing your posts, seeing your results, seeing how we can help. As you reach out to us on private message and stuff like that. We're going to provide you with as much value as possible to help you become successful traders. We want to see everybody take down the banks. That's what we want to do. Take their money and run. Pip and run, guys. Talk to you later. Peace and pips. Cheers. God bless you. I love you. Bye.